This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, is Rob Reinhold.
Hello, everybody. This is Rob Reinhold with Maverick Trading and Maverick Currencies, and we also have a book, and I'm going to be telling you about that just in a second.
Yeah, and speaking of book giveaways, it seems like you guys really like those. So like I said, we're going to do another one today. But first of all, we got to kind of get down the way we distribute these things. Now, if you remember last episode, Rob told you that he went into the comment section of episode 14 and congratulated the winners individually under the comment you made. So make sure you're going back and looking at those, because the next step is to actually email Rob with your information. And how many people have actually done that so far, Rob?
Just a few, and we've got a few more. So we just wanted to come on and remind everyone, if you put in the comments that you wanted a book and you don't have like notifications turned on to when someone replies to your comment, go back in and see if we chose you.
Yeah, because this is how we're going to do it from this point on. So just remember that. And for those of you who participated last week, make sure you take a look at that. But tell us about the book giveaway you have this week, Rob.
Well, back in 2011, one of my traders came to us and said, "Hey, Rob, have you ever thought about writing a book?" And I thought, of course, everyone thinks about writing a book. But I thought, you know what? It was back in 2011 where like self-publishing wasn't really a thing. And I said, you know, it's going to be hard to get published. And in about 2 weeks, he came back and said, "Hey, I've got a book deal with McGraw-Hill. They want to give us an advance and pay us this money to get this book done." So, oh, crap, now I have to write a book. So in 2011, we wrote the book, Maverick Trading, Secrets of Generational Wealth. And we basically go through our methodology of how we trade. Now, this is going to be a stock and options book. That being said, trading is ubiquitous. You can use it on any asset class, Forex, crypto, bonds, whatever it is. Look, entries are the same. Risk management is the same. Position management is the same for the most part. So if you want to get this book, go ahead and jump on. Again, I give bonus points for timeliness. So if you're one of the first ones to comment, I'll give you the bonus for that. And also, I like to hear your stories. I like to hear your stories of your trading adventures, where you've been in the past, where you want to go in the future. The more info you give on yourself, the more likely I am to probably find your story interesting enough. So please jump on, tell us a little bit about yourself, why you want the book, why you need the book, and we'll get it to you.
Right on. Now, I will say a lot of the way I trade now did come from things I took from books on stocks and commodities trading. So yeah, it's absolutely appropriate. And just to understand, traders, that we don't have a way to really please everybody here. So it's just, you know, it's Rob's giveaway. He's going to do it the way he wants, and that's the rules we have to adhere to. But let's move on.
It is a dictatorship, for sure.
Yes, it is not a democracy. This is an absolute tyranny, Kim Jong-un style. So that's what we're doing.
I wouldn't go that far. Let's back that off a little bit.
I think if we start there and then like become gentler, it makes us look better.
That is so true.
So episode 16 is a bit of a playoff of episode 15. We talked about daily routines and how important those are. I think a lot of people didn't even really consider how important they can be until they maybe heard, you know, the two of us lunatics mention ours, and how it's really integral to the way we function. Like we talked about with losing streaks. It doesn't just happen daily or weekly. It can go even beyond that. And so those longer time frames is what we're discussing today. And so we're going to go weekly, monthly, quarterly, and yearly in this episode. So Rob, go ahead and start us off, and I'll jump in where I think it applies.
Last episode, we talked about these routines. I said, look, the reason to do routines, I said it doesn't matter what routine you do. The purpose is to get to the point to where you are trading with your prefrontal cortex. And we talked about how complicated life is and how busy life is, and we have relationships and money and all these things, and they seep into your subconscious. It's very important to go through certain steps to make sure that every time you are putting money on the line, that you are only using your prefrontal cortex, your logic and reason, that all that time that you spent developing your system, we want to make sure that that's only what you're following and you're not letting anything else in there. When we start to talk about longer time frames, all of a sudden, that's not the purpose. That's not the purpose to a weekly review or a monthly review or a yearly review. The purpose of these reviews is to get better. This is where we're going to start on a weekly routine. I like to do this on Sunday night. I've been doing it Sunday night for my entire career. My wife knows that right around 7 o'clock, 8 o'clock at night, I go into my office and I start to do some work getting ready for the next week. And for years and years at Maverick, we always had our live weekend classes, our trading room and our currency room, where all of our traders joined in with us. And we all talked about getting ready for the week ahead. We actually stopped doing that a year ago, which I'm really sad about. Pull out to all of our traders, and our trader said, hey, Rob, we want a video over the weekend that we can watch whenever we want. I'm a little bit sad about that, but that being said, I still do it every single week on Sunday night. In episode 15, we didn't really talk about journaling. Now look, journaling could be done on a daily basis. And if you want to do journaling on a daily basis, I highly recommend it, because what you really want to include in your journals is how you're feeling at the time. What were some of the mistakes you made? Sometimes that trade you made on Monday is very fuzzy by Friday or Saturday. So we really want you to do journaling on a daily basis. Once you get more experienced, you can do it on a weekly basis. I now do journaling on a weekly basis, to where now I can take a look at my actual trades for that last week.
When I created the podcast episode on the old Forex Q&A podcast about journaling, and then had the corresponding blog with it, I knew it was important, but I didn't really understand how important it was going to end up being until, years later when I got all the feedback on it. The main points I made is I told everybody all the columns they needed to make, but the most important column of all was actually the comments section, which surprised people at first. But this comment section is what you're going to use at the end of the week or the month or whatever you're looking at to determine, how did you really do and what things do you need to change, if any. Remember that as we go along with this, because this episode and journaling go hand in hand.
Patrick, you were so right. Yes, you need to have the date, the time, where you entered, where you exited. Sure, you need that information. But the information you really want, especially in your first couple of years, is the why did you do what you did? Because we are going to start out every week. We want you to look back on your prior trades. We don't care whether or not they made money or lost money. That's irrelevant at this point. We want you to take a look back and say, how did I manage these trades? Did I follow my system to the T without deviation? We've talked about reframing success from making money to following your system religiously. Did you do that? If you didn't, let's look into all the reasons why. This is very, very important for that first couple years of trading. There's no way for you to get better unless you do this. We talked about this in episode 14, Trade Like an Athlete. Athletes have film study. At the end of every week, after every game they play, they have film study. You must do film study.
And this is hard too, because most athletes hate film study because they, and sometimes all of their teammates and coaches, get to see exactly where they screwed up. So if film study was voluntary, I don't think a lot of them would show up for it. Likewise, some of us don't like to admit we make mistakes, and when we do, we don't like to see them and revisit them, but it doesn't matter. It's the only way you're going to get better here. So you have to have the discipline to actually show up to this and be very open and honest with yourself where you made mistakes. Don't excuse these things away. You wrote those comments down for a reason.
Patrick, in film study in college, after the games, became a little game of all of the players to try to point out all the mistakes that all of our friends made to the coaches. Yep. It was actually so much fun. And you hear them say, shut up, no, shut up, don't point me out. I'm like, oh my gosh, look at Higginson, look what he did. Oh my gosh, so funny.
Yeah, like you can make it fun, but that still doesn't mean you want to be there when it's when the spotlight's on you.
One quick story on this. There was a guy on our team, he was a receiver, and he hated to be hit. There's a reason he was a receiver. He hated contact, and he did everything to avoid contact. They put him on the kickoff team, and in one of the games, he ran outside the sideline and behind the entire team on the opposing side to avoid getting hit. And I pointed that out in film study, and the coaches yelled at him and said, Higginson, you are off kickoff team. And after the film session, he came to me and said, thank you so much.
I'm surprised nobody noticed, unless he did it on the opposing side.
No, it was hilarious.
For those who don't know, if he did want to re-enter the field of play, he would have gotten flagged. So once you step out of bounds, you're done. But it sounds like that's what he wanted. So.
With just the shame of not just stepping out of bounds, but to go behind the entire opposing team just so you didn't get hit. You shouldn't be on kickoff team.
Could you imagine that guy in the military?
No. We want you to have your own film study, where you really take a look back at what you did that last week, what you did right, what you did wrong, and then really you're going to want to plan the week ahead. Now, we're going to do two things when we get into planning the week ahead. We're going to talk about fixing the mistakes you made. I'm not a huge believer in goals because whenever I hear the word goals, in my mind, I'm thinking of wishes, and wishes don't really make any money. So instead of goals, I like to think of plan for action. What do you think, Patrick?
Totally. I mean, now there's two different kinds of goals, in my opinion. There's constructive and there's destructive. In a later episode, I think you and I are going to get more into the destructive side of things. So for now, what are some of the more constructive goals traders can have kind of in the scope of what we talk about here?
We've talked about that in prior episodes, where we've talked about reframing what success is. So this is exactly what we're talking about. These goals, we want you to think of a plan of action. So your goals for the week should really be to correct the problems that you had the week before, to make sure that you are not redoing the same mistake over and over and over again. And we were just talking, Patrick, about how sometimes this is very important for the first couple years of a trader's experience. But even for an experienced trader, this is something that should be done. And the problem is, experienced traders, they're sometimes the toughest people to get to.
Yeah, and let me reiterate why this is because during this whole journaling process, and especially in that comments section, you need to be incredibly honest with yourself. You must be your own worst critic, and you can't make excuses as to why things happened. You have to be very upfront about it. Now, with experienced traders, sometimes we don't think we make mistakes, even though we do. Or if we do, we just kind of write it off and we don't think it's ever going to happen again. Experienced people are the worst. I run into a lot of people on social media that want to argue with me and say, I've been doing this for 20, 25 years. Problem is, they're making elementary mistakes, and they've been making elementary mistakes for the past 20, 25 years. So no matter what I tell them, they're going to sit there and fight me on it. Now, they haven't had really any measure of success in those 20, 25 years, so that should tell them something, but they're so dyed in the wool, can't tell them anything. So don't become one of those people over time who just thinks you're completely infallible and can't learn the same way somebody can learn in their very first month. It's a good point, Rob. It's every bit as important.
Yeah, and we've trained our recruiters to actually look for that type of trader, the trader that's been doing this for a long time, yet continues to make the same mistake. We've instructed them to take a pass on them.
Yeah, it was really interesting. When I was going through the recruitment process myself, I didn't know what you guys were looking for, so I just answered all the questions, just like regular questions. But come to find out later, the type of trader I thought you guys were looking for was totally not what you guys were actually looking for. And I thought that was really interesting. And so this is one of those things that will kind of leak out there for anybody who's been interested in applying to Maverick down the road. This is one of those kind of abstract things that most people don't think they need to have, but you absolutely do.
Yeah, we're looking for people that are willing to change and willing to learn. That's it.
Even no nonsense Forex traders that I've given you a complete blueprint on how to do everything. When it comes to growing from there, that's what we talk about on this podcast, because this is not stuff I went over in the past either. So always keep this stuff in mind.
So we want you to take a look back at last week, review your trades, identify the errors you made, and then your plan of action is to not redo those errors. Okay, so that's pretty self-explanatory. The other thing that I do on a weekly basis is I plan the week ahead. And as I said, I do this on Sunday night, and I really take a look at the week ahead. Now, people are already saying in their minds, hey, Rob, the market's already open Sunday night. I almost never trade Sunday night. Almost never. There's probably 1 week out of the year where I think there's enough volume and volatility to make it worth it. Other than that, I don't start work until Monday morning.
Yeah, that makes good sense for intraday traders, which keep in mind, everybody, Rob trades intraday. VP trades on the daily chart. So when we talk about these things, that's what Rob's talking about. That's what I'm talking about. Now, for no-nonsense Forex daily chart traders, planning the week ahead can be important here, much more so than it was years prior, because, and this has been a sore subject with all of us, and that has been all the different news events that creep in to disrupt our trades that weren't there years prior. So when the Fed heads speak, certain inflation numbers, you guys know what these are. Everybody's been asking me to create a new video, an updated video on news events we need to avoid. Problem is, they're always changing. And as soon as I put that video out, 3 weeks later, information is going to need to be changed again. This just is what it is. We finally got our volume back, and that's great. But at the exchange of having to be a little more careful with some of these landmines that come in our way. And so a really good thing you can do in terms of planning your week ahead as a daily chart trader is to mark and highlight what you think those particular news events are going to be, what those speeches are going to be, and then take all the necessary measures and get that ready before the week even starts, so you're not caught off guard. Because these speeches come at different times. These news events can come at different times, and you can easily get caught off guard if you get complacent and think all weeks are the same and just plan your day and your week out like that. No, they're all different now. It's a new world out there. So I really think this does apply to us too. And I have taken these measures myself. And even if I'm wrong about the news event, I need to know that it's coming. I need to be aware.
Absolutely. In the market, there are unknowns. There are things that we just don't know. But there are two types of unknowns. There's known unknowns, and there's unknown unknowns. A known unknown is something like the Fed is going to come out on Wednesday and announce their policy. Now look, nobody has any real idea of what's going to happen Wednesday after the Fed comes out. That's an unknown. We have no idea of the direction. We have no idea of the magnitude. We don't know. But what we do know is the exact time it's going to happen. We know that. We can plan for that. If you are in a Aussie trade and the RBA is coming out and announcing rates, you better know that. Now, you don't know what's going to happen to the Aussie, but you know that there's going to be something big. You have to know that. And by taking a look at what's going to happen for the week, you can actually prepare your trades for that, which means if you know that the RBA is coming out Monday night with a statement, don't enter an Aussie trade Monday afternoon. It's just as simple as that. Or else you're going to get blindsided by some big price movements that could potentially be really nasty for you. So I'm with you, Patrick. You have to take a look at the week and plan it out. Now, I'm a little bit different. As you've said, we trade differently. I'm looking at the week, not so much of what I'm going to avoid, but I'm looking at the week as far as when I'm going to play. In the Forex market, the fact that it's open all day long, 5.5 days a week, 24 hours a day, there's lots of times where it's listless, where there's not a lot going on. I call it the chop. I don't want to trade during chop. I only want to trade during times of actual movement with consistent trends that don't reverse and knock you out and fizzle out. I only want to buy a breakout during a time of day where breakouts typically run. I don't want to buy a breakout in the early Asian session when there's no news. I'm not going to touch that breakout. So I will look at the calendar and I'll look at the markets and I will plan out, okay, what times of this week do I think are going to be the best for trends and the best for entering new trades? So I will take a look at the schedule and I will say, oh, there's the RBA on Monday night. I'm going to be active Monday night after the report, looking for a potential trade in the Aussie. So I'm looking at, okay, when can I actually make a trade in a high energy period? So I'll look at the calendar and say, okay, I'm going to be active Monday night, Wednesday morning, Thursday afternoon, and that's it. I've planned out my week and I'm not going to be active unless we get what's called an unknown unknown. These are the things you cannot plan for. These are the things that come out of the blue. Just recently, we had the Bank of Japan come out and intervene in the Forex market.
Oh boy.
We had no idea. There's no way to prepare for those. You just have to be ready for them.
And that's still ongoing, by the way. That story is not over. You're still going to, you used to say it all the time, and you made me say it all the time. You can pretty much sleep through any Japanese news, and we could for about, what, 7-8 years, but that's just not how it is anymore. Japan matters, and it's weird. I don't even know quite how to handle it yet, but I do know there are a new set of landmines, not as frequent as the ones with the USD, but they're here now. So yeah, I'm glad you brought that up too, because it's just more stuff that we all have to deal with, you know, the intraday traders and the daily traders alike.
Yeah, so every week we want you to review your trades, correct the errors, take a look at the week ahead, and kind of plan out, what do I need to know about this week? And then at the end of that week, you're going to do the same thing. Review your trades. What did you do wrong? Make a plan of action for how you're going to fix that mistake. And then you're going to look at the week ahead and make your trades. So that is it. That's the weekly routine. All right, the next one we want to talk about is the monthly routines. Now, this is where we're going to use the term monthly routines. Understand this might be quarterly for some of you based on your trading activity. There's no reason for you, if you only made 2 trades in a month, to stop and take a look at your trading numbers.
Guilty.
When we talk about monthly routines, okay, maybe it is a number of trades. Patrick and I were talking earlier, and in my opinion, I think about 10 trades is the minimum amount of trades for you to stop and take a look at the statistical trading numbers. If you've only made 4 trades and you take a look at your win-loss, profit factor, all these things, that is a very small sample size and it's probably not all that relevant. So maybe at 10 trades, you actually stop and take a look at your numbers. Monthly, quarterly, basically, once you get a large enough sample size, we want you to stop and look at your trading numbers. You've already been looking at all the individual trades. You don't need to look at your individual trades on this monthly or quarterly basis. You want to take a look at your trading numbers. And this is where I love knowing my trading numbers. And it's always about, oh my gosh, my profit factor dipped a little bit this month. What can I do to get that profit factor back up? And so that's what we're going to do, the same thing. You're going to take a look at your trading numbers. And you're going to say, okay, based on my trading numbers, what can I do to get these trading numbers to improve over the next month, quarter, or number of trades? What do you think, Patrick?
Yeah, now don't conflate this with what Rob and I were talking about in a past episode about those, 25 trade blocks, to where you actually might have a particular goal in mind there, and you want that larger sample size. This is something different.
And then at the end of every year, you're of course going to want to stop and pause and take a look at the year in review and take a look at basically your trading numbers again and say, okay, how did I do this year? Now, you've been working every single week. You've been working on fixing problems, fixing problems, fixing problems. You should, at the end of the year, have fixed a lot of your problems. Probably not all of them, but you should have fixed a lot of them. At the end of the year, take a look at your trading numbers. And this is where you can really take a look at, okay, how well did your system perform? You've had a long enough time and enough trades to really evaluate it. Now, this is where I think you can get into starting to get into the gears and the nuts and bolts of your system. What do you think, Patrick?
I think so too, but it's going to be dependent on a few things. Now, especially in your very first full trading year, this is going to be good because you get to see in real time, if you're trading real money or for a firm, how does this thing actually perform with you sitting behind it? Is this enough data to say, okay, if I'm underperforming, maybe I need to make changes to the algorithm itself? Well, maybe. But you owe it to your own algorithm to make sure that you were not the reason for a hefty amount of the losses which occurred over the past year. You need to really go back and do that calculus and find out, okay, maybe I'm throwing a random crazy number out there, 35 losing trades in the year. How many of those were my fault? How many losing trades were completely due to the algorithm itself? You need to have the answer to that question first. I cannot give you an actual number. You back tested and forward tested this algorithm for so long. To sit there and make adjustments to it after year one, when you were the reason for parts of its demise, keep very close attention to that. And again, be very honest with yourself, because, you owe it to yourself and the algorithm you created to let it perform as optimal as possible. And when you're a discretionary trader and you're behind it, it's never going to be that way. So you have to kind of grade on a curve a little bit here. But yes, this is when I take a look at the overall number, compare it to other years, compare it to the volume, because we're all trend traders here, that I've seen in the past years. And then and only then do I answer the question, are there adjustments that need to be made? I think most of the time the answer is probably no, because like I said, you have 3, 4, 5, 6 years of data on this thing already. 1 year is not a great period of time to answer that question, but this is the moment in time where you do that. I think the end of December, that first week in January, is a perfect time to sit down and analyze this. Like I said, I speak from experience. This is something I look forward to every year. I don't mind sitting down and doing this part, because this to me is the part that's really interesting and fascinating to me is, okay, what can I do to change this? Do I need to change this? What can I change in myself to make this better? And that's where I think the real reflection is, more so for me, to where things to like the weekly and monthly and quarterly are just a little bit more kind of a routine for me, kind of like wake up, time to make the donuts type thing. The end of the year stuff is the stuff that really fascinates me, because this is me taking my life's work and attempting to make it better. So that's just my rant.
It's one of my favorite things to do as a trader. I love to get together and run reports, yearly reports. I love to put together my balance sheet, my net worth sheet. I totally love it because I'm a stats person. I love numbers. And as you are playing this game, and I know I'm calling it a game, but that's literally what I tell myself. As we're playing this game, and I'm not just talking about the game of trading, I'm talking about the game of life. As we're playing this game of money, to where we're buying assets here, we're buying real estate, we're saving up our paychecks, we're doing all this. Your end of the year numbers are your stat sheet. The question is your stat sheet getting better? I love to run those numbers and see, did I get better this year? And there's some years where I didn't. And it's like, oh my gosh, what happened? And then you go in and you figure out, okay, what's going on? And then there's some years where you just crush it and everything looks really good. And you go into the year just in a really good spot. I absolutely love to do this just on a personal basis. But I think it's just such a healthy thing for everyone to do, to go in and really get your stats. And I highly recommend every single one of you have a yearly net worth statement, where you list all your assets, you list all your liabilities. Assets minus liabilities equals your net worth or your equity. That number, you should get that growing every single year. Now look, there's going to be some years where it doesn't grow, where it goes down. Who cares? You're going to live a long life. If you can get most of the years to be positive, you're going to do great. This is the way to really track how you're doing as a human being in the world of finance. Put down your net worth on top of your trading. It's a great way to get you motivated for the next year.
Yeah, and I want to take it even beyond that. The end of the year is also a really good time to reflect back on the past year and ask yourself, where else did I improve, or where else did I regress? Did I get healthier? Did I strengthen my relationships? Have I grown spiritually? Things like that are really good questions to ask yourself at the end of the year too, because then you can analyze that and say, okay, how can I improve off of that if I need to for the next year? But, as I say all the time on this podcast, Rob, you have to identify these things first before you can fix them. This is stuff I never think about until the end of the year. And then I look back and I say, okay, I said I was going to do this. I wanted this to happen. Did it actually happen? Do you do this too? I would imagine you're the type of person that would.
Absolutely. It has to be identified, and then it also has to be measured. Like, you have to measure it. We talked about this in the book Peak. It has to be measured, because how else could you possibly know if you are getting better? And I love what you said, in your entire life. I am very success oriented. I need to get better every single year. That's just my personality. And look, trust me, I know everyone thinks that's a great thing. It's actually sometimes has some negative consequences to it. But whatever I did the year before, I'm trying to always get better. And it's across the board. I want to be a better father. I want to be a better husband. I I want to be better a neighbor, a better friend. That just drives me. And if you're really not measuring it, then how can you know at the end of the year whether you've done it? Finance is easy. It's just the numbers. The numbers don't lie. Your net worth statement doesn't lie. Your trading numbers don't lie. Outside of that, you've got to really put some thought into it.
Yeah, just what you don't want to do is be those people who we always see on Facebook and Twitter saying, 2022, I'm so happy it's over. And then they say the same thing in 2023, 2024, 2025.
Every year.
It's on repeat. Yeah, these people aren't even trying to get better. But you know these people that are just never, ever going to get better. We are not like that. Rob and I are high achievers. This is the approach we take to everything we do. And hey, guess what? It's worked, so it can work for everybody. But you have to take the right steps. It's not one of those things, if you believe it, you can achieve it. That saying's true, albeit a bit corny, but you actually have to take the steps as well. People forget that second part. So that's what this episode is really all about.
Can you even imagine if every year was the worst year of your life? That's exhausting. That's so exhausting.
I mean, if it actually was, that'd almost be positive to me, because I'm like, okay, I got that year out of the way. But with these other people, yeah, let's be honest.
Yeah, if you've had 10 years in a row where it's always been the worst year and worse than the year before, it might be you.
It's you. Yeah, maybe it's you, Taylor Swift. But we hope you enjoyed this episode, and we hope you found it useful. And more than anything, regardless if you found it useful or not, that you actually implement these steps. That's why we do this. And we want to put, even psychologically, as abstract as it can be sometimes, blueprints like this in place. So please take this seriously and run with it. Tell us what you thought in the comments section. And comment too, if you want that book, let us know. Yeah, this will not be the last time we do a book giveaway for sure. We are more than happy to keep this going every once in a while.
And let's summarize this episode in just some hard lines of code. Weekly routine. You're going to review your past trades, figure out what you did wrong, fix it the next week. Look to the week ahead, plan out your week. Monthly goals, again, once you get enough of a sample size, you're going to look at your trading numbers. Okay, what are these trading numbers? What can I do to improve these trading numbers? At the end of the year, we want you to look at your trading numbers and take a look at your net worth statement, look at your whole life, and then, of course, set some objectives to what you want to accomplish in the next life. If you do this and you get into a habit of doing this, look, no one's a superstar every week. I get it. Sometimes we have bad weeks, and sometimes we have bad months. But look, if you lived your entire life doing this every single week, you are going to win. It happens. This is just what happens when you do this. If you don't plan it out, you're just being blown about in the wind, and wherever you end up, you didn't choose it. It just happened to you. Pick your life, decide what you want to do with it, and work at it. It's an awesome way to live your life, and it always works.
Traders, thank you for joining us here on the Trading Psychology Podcast, episode 16. We will see you next week.
Bye, everybody.